Hello and welcome back, guys. You're tuning in to howtoplaystock.com. My name is Casey. Today is November 14th, 2017. In today's video, I wanted to cover stocks, okay? And I don't, right now, I'm kind of trying to stay clear of stocks due to the fact that in previous videos you've heard me talk about the overall market index as being extremely overvalued, about 4 times overvaluation on, say, the S&P 500, the Nasdaq, Russell 5000. Uh, so the overall market indexes right now, I believe, are due for a serious correction, and because of that, I'm just staying clear of stocks. But one stock that I've had my eyes on, it's actually an ETF, an exchange traded fund, and it's very well diversified, has low volatility. But I've been keeping my eye on this ETF for probably a good year and a half. I was invested in this at one time as well. I had to liquidate due to some financial hardships because of a car going out on me. So it wasn't a long-term investment for me. It was more of a passive income. I was using it to generate some income. But it's called Power Shares Exchange Traded Fund. Now, the price, if you look at the price of this, and you compare it to the price of getting into the S&P 500, the Nasdaq, and those other indexes, I would say the price, when you're comparing it to those others, is a lot more fair value. Now, I there's not a PE ratio on this one that I can see from Google Finance here. So if you guys are watching this video and you know the PE ratio for this ETF, by all means put it in the comments below. But without looking at the PEO, or the price to earnings ratio, the PE, I couldn't tell you if this thing is maybe indicating that it's overvalued or not. I just wanted to show you this ETF uh, for the sake of diversification, okay? Because if you're diversified in a stock or any type of investment on the stock market, you're reducing your risk of losing all your money, okay? Now let me show you what I'm talking about here. We'll go over here and I'll show you the holdings for the Power Shares S&P 500. Now it's a high dividend, low volatility portfolio, which for me, as an investor, I love that. Um, so let's take a look at the holdings here. As you can see, there are numerous companies that are in this portfolio, and it shows them by portfolio weight for you here. Now, the returns year to date and the PE ratios for each one of these stocks is over here on the far right where I have my cursor. As you can see, fair value for PE ratios is between roughly 10 to 14. Okay, and that's just going off of uh, something like the Warren Buffett valuation indicator, or some of the other books that I've read on investing by experts who focus on fair valuations. Okay, so anything above 14 is usually going to be overvalued, and then anything under 10 is going to be considered undervalued. Okay, now that doesn't necessarily apply for every single stock. Some of them, you have to go in and look at the books, but on average, that's what you're looking at as far as the PE ratios. And as you can see in this holdings, there's quite a few at the current moment that are overvalued. Okay, which means that if we decide to have a correction in the stock market, and you're invested in something like this ETF, even though it says low volatility here, you're still gonna lose money. Okay, there's a interesting fact that I read out there that about 97% of mutual funds don't even really match inflation. When you consider all the commission fees that are given over to the hedge fund managers, as well as taxes, and then you count in inflation on top of all that. So it's a tough game to play, and right now you can see the yield on this is only 3.54%. If you're comparing those returns to something like cryptocurrencies right now, it's I mean I hate to say this, but it's pathetic. You know, but we're not really focusing on high returns. We're not doing we're not looking at this stock as say like a day trading strategy. This would be more for just generating income. So with that in mind, the price really is not going to matter too much. You're just uh, if you're an investor and you were looking at investing in this, your main concern should be that is it going to be around 5 to 10 years from now? Okay, so try not to pay attention to the price of it. And I'm basing this off of a strategy for passive income. So theoretically, you would just be going for generating passive income. And the companies in here, I would say for the most part, are all pretty stable companies. Now, keep in mind, these companies have their pitfalls too. Okay, but if one goes down, well, you still have a lot of others, in here that could survive. And what they what they do a lot of times, they'll just replace the one that, let's say, for instance, I don't know, just hypothetical scenario. Let's say Ford Motor went bankrupt and they no longer are around, right? Well, they would find another company to replace Ford Motor, okay, and it would probably be a really big company that kind of matches what this portfolio is going for. So that kind of gives you an idea of how exchange traded funds um, are put together. And again, some of these exchange traded funds act like mutual funds, as you can see right here. So I just wanted to show you that. The other cool thing, not all these stocks that I'm showing you, as far as PE ratios, are considered overvalued. Like you have some fair value ones in here too. Ford Motor, for instance, PE ratio 1105. That's, to me, that says fair value. Verizon Communications 11.47. There's even some in here that are uh, let's see if I can find any. Okay, maybe not. I thought there might be a couple in here that are undervalued, but at the current moment there isn't. So just an example of an exchange traded fund and how they put together the holdings for these exchange traded funds. I just want to show you that. I'm not a financial advisor. I'm not an expert stock market guru, but I do have some knowledge on investing. And I'm not telling you this is the only thing that you have to invest in if you were going for passive income. Okay, as of right now, like I said, I've been invested in this before. Right now, I'm not invested in it, and I'm waiting for an opportunity when the stock market's correct and everything goes down in value, because I believe that this ETF here will go down in value as well, and that'll allow me to maybe buy up some shares of this for some passive income at a more fair value. So if you are somebody who want to get into stocks right now, by all means, it's your choice. It's whatever you want to do. It's your money, so you could get into it. And what I was trying to point out was that as far as price, comparatively speaking, in regards to looking at the S&P 500 and some of these other indexes abroad, it's not a bad choice if you're going to go with stocks. Okay, that's all I have for today. Hope you guys are having a good one, and remember, income is the outcome. Okay, I'll talk to you later.